Hello, everyone. Hope you're having a nice weekend. Should be a pretty interesting week in the markets here. It's really amazing that the GDP sold off by so much. Well, not sold off as the GDP, but diminished by so much. I mean, it was in the fours, and then what did it do? This quarter come in at 1.6. So that just shows you, man, all this inflation is really starting to slow things down. Obviously, I'm in someone who's interested in the markets. All right, I follow them, but I'm starting to like go to the store and go wherever and just hear people that are not market people just talking about the price increases. So, as long as the government continues to spend recklessly, and it looks like it's going to, and we got this big move up in oil, we're going to get into Berkshire Hathaway here, but this big move up here in oil hasn't hit the markets yet. You see this? December went from 68 up to April 85. So when that comes into the markets, that's going to be another wave of inflation. And there are ways to protect yourself, which we talk about. But I just want to show you Berkshire Hathaway. Now, going into this is what I would be looking at if I was trading this. See how this level that was resistance here, this is 400, came support over here and support over here. Well, first of all, it's not surprising that there's support and resistance at 400. People like nice round levels. It's not at 402. It's not at 397. It's at 400. The market is psychology, and people like nice round numbers. The resistance here became support here because there's people who sold and they regret doing so when the price goes higher. And they say, if it gets back to my price, I'm going to buy my shares back. So we have support there. Now, why else can, so resistance can turn into support because of seller's remorse, but support can stay intact because of seller's remorse too. There's people who sold here who regret doing so when the price gets higher. They tell themselves that they're going to buy their shares back if they can at the same price they sold them at. So seller's remorse can turn resistance into support, and it can keep support intact. Now, the next thing to see here is, sorry about that. I just had a cough. I got like allergies over here. Notice how when we get to support, we rally sometimes. It's a tendency. Of course, it's not a guarantee. Supports this large group of buyers. And sometimes the buyers start to sense there are other buyers lurking around. That's why the price isn't going lower. The price goes lower if there's not enough demand, if there's not enough buyers. When it stops going lower, some of the traders start to say, wow, must be new buyers coming into the market here. I don't want to miss out, so I'm going to have to pay a higher price than anyone else is willing to pay because that's who the sellers are going to go to. So someone might bid 400 and someone else might come in the market and be like, you know what, I'm willing to pay you 401. That's who the sellers are going to go to. Someone who really wants to get their order executed might say, okay, I'm going to go to 402. So a lot of times when you get to support, you get this buyers outbidding each other, or you get a bidding war, and that can force the price higher. So I wouldn't act yet. I would say, I mean, I don't want to get too precise, but we're getting close to 400. So here's what I would be thinking if I was trading this, and I might. All right, if we get to 400 and we kind of bounce and we break this downtrend line, that's where I'll jump in. If a market's going lower and it stops going lower, that could be the first step for it to move higher. If a market's going lower and it stops going lower, it will cross the downtrend line. So the downtrend line, the crossing of a downtrend line is like a wake-up call. Like say it was here. It's like, all right, the red team's in charge. All of a sudden, it stops going lower. It trades sideways for 2 days. And then it just crosses the trend line because this is how trend lines aren't scientific. They're just like graphical illustrations. It's like a wake-up call. It's like, hey, look at this. The blue team is in charge here again, or the blue team's taking control. And you get this very tradable move higher. So anyway, that's what I'm looking for. Now, the key is wait for the reversal to happen. This could keep going lower. It can fall right through this support. All right. That's why we want to wait for the reversal. A lot of trading models are based on this concept of like what we call a setup and what we call a trigger. The setup is like the get ready, get set. Well, if this thing is testing support, that's the get ready, get set. but it's not the go. Think about if you're at a race. The starter's like, get ready, on your marks, get ready, get set, go. If we don't cross this downtrend line, we'll never get the go. So we won't take a position. Most trade, well, I don't want to say most, but a lot of traders try to catch the bottom. You'll never catch the bottom. You'll never catch the top. In my experience, if you wait for the reversal to actually start before you jump in, the odds and the risk reward ratio are going to be much better in your favor. All right, Ren. Hope that helps, and I will see you soon. Make sure you check us out tomorrow for our 8 a.m. Market overview. And on that call, that's a lot of my like institutional clients, but a lot of the retail clients really learn a lot from it. So, all right, hope to see you then. Have a nice